Okay, for the weekend update, I'm going to split it again with the Canadian pairs and gold today, and on the weekend, the rest of everything. So, looking at the Canadian pairs, my view on all of these hasn't changed. It's still bearish. From Thursday's hard move down, it ended up correcting from that. And as I said in yesterday's video, although it looked very bearish, we need to see a five-wave move down. For example, in US Canadian, we need to see a five-wave move down, establishing a bearish impulse, and then we can take a trade on it, if not already short from this region. Now, the break of the trend line here is not relevant. The trend line is only a guideline. It's not a boundary, it's something that traders may or may not see, and it's used as a guide based on price action and candles and other things. So what I wanted to say is from Thursday's hard decline, it stayed into Friday afternoon as just three waves. If you look at this, you can see it on the 4 hour, but if you look at it on the 1 hour, this is just three waves here. There is no fifth wave down. So going into Friday's news, it looked less likely for it to make a low. It was still open to it, but as you can see what happened now, I want to go over the possibilities from here on. Now, first of all, I'm still holding it bearish as such. Now, just looking at it on the 4 hour, overall, we have the weekly bearish divergence established. So keeping that in mind, the principle remains that three-wave corrections such as this should be sold into. Now the fact that we only had, actually, let me take this first of all two ways. Anyone who's been watching the videos will know what I'm going to talk about, but I'm going to cover it once again anyway, as I'll go into a bit more detail on all these pairs. It can be viewed a number of ways. I set it up as a more bearish count, so we are possibly in wave 2 of wave 3. But the whole thing can still be viewed as five waves entirely with 1, 2, 3, 4, 5. And that we are now in a larger three-wave correction for larger wave 2. I think that count is valid. This wave was very long, which is why I've given it to the bearish count. But I feel that it can be marked as a fifth wave overall for 5 in its entirety through here to 14 June. Now from here, now that we have established only three waves down on Thursday into Friday, that cannot, in my opinion, be taken as a first impulse of the next leg down. So I'm looking at right now two scenarios based on the count I have. First of all, we can be looking at a larger correction here where we have three waves here into Thursday, a three-wave correction, and now this can go a couple ways. It could possibly make another three-wave correction like this, down a bit lower and then move up. Or we could simply be looking at a sharp three-wave move down here and then some type of correction further up, maybe to the trend line, maybe a bit above, and then down. So I'm remaining bearish on it either way. There is actually a third possibility I want to highlight, because at this stage I cannot tell what's going to happen because we have had only three down on Thursday. So I cannot say, okay, well, there's a 5 down print, sell any local corrections. I cannot say that because the 5 down bearish print was not made. So the third scenario on this that I can see is possibly assuming, because a bigger correction like this would make me think it's more wave 2 and that this in its entirety was wave 1. So assuming that this is larger wave 2, one possibility in here is that we've had three waves up here, and it is open to the possibility that we have three down, three up, three more down like this towards the 14 June low or maybe a touch below, and then it exposes itself as a three-wave move to a five-wave C leg up for a flat. So that is a possibility I'm looking for. So if I see a move down on Monday and Tuesday to the low or to a new low, I will be looking for another swing up for a possible flat. So those three scenarios are open, two heading up basically from one from this region and one from here, and third down a bit lower for a flat. And what that would do overall is just make a larger three-wave correction, maybe stopping a trend line, maybe breaking through. Like I said, the trend line is just a guide, and ultimately resolving itself with a downward move. I do not have a bullish view on this. A move up above 1355 is not what I'm looking for now. So I think, frankly, if you're short from this region, you know, the usual principle applies of keeping your stop at wave 2 high, at the wave 2 high, because if this is really bearish in wave 2 of 3 now, this high won't be broken over here. So that is how I'm looking at it. Essentially, the downtrend remains. It just looks like the correction will be taking longer in some manner, either from here or if it's a flat from here. So that's the gist of this pair. I mean, looking at the weekly, well, it's a small type of, it's not quite an inverted hammer, but it has that shape to it, let's say. So the ADMA is going to come in again around actually Thursday's high. So if it does move up next week, again, the ADMA will be serving as a resistant point along with the data on the lower time frames. So that remains about one moment. Yeah, about a touch above Thursday's high possibly. But in any case, it seems the correction will carry on a bit longer and then an expected down move will follow. And I'm still looking at the down move toward 124. So there's a long way to go in this if the bearish view and the bearish divergence view are correct. Okay, Euro Canadian. Okay, starting with the 4 hour. Again, just like US Canadian, Euro Canadian saw only a three-wave down move right here on Thursday. And so the correction is ongoing. Now, I have not labeled this, but as I've said before, I can count this as 5 waves down. I will go over this manually. I'm counting wave 1 to here, wave 2 correction like that, then 1, 2, 1, 2, 3, 4, 5, 4, 5, larger wave 4, 5. So in my view, that is an established 5-wave decline. Now the correction since there, we can view this as 3 up, well, I don't need to mark it, 3 up, 3 down, and I would suspect that this will continue up. I don't have a view right now that it's going to make a new low beneath here. I suspect this should move up a bit. We have some levels here printed on the fib retracements. And overall, I'm holding this also as completed for wave 2 of a large, how long is that? Over a year, basically, flat. Lasting, what, 14 months? 14-month flat, essentially. I think it's done. And so I will be looking for this to turn over. The month ends next week, I think. So we'll get a monthly print on the candle, and I am looking for this so long as, basically the gist of this is that, going back to the 4 hour, so long as the 2 June high holds, I'm viewing this as a corrective sequence. So any type of corrective pattern beneath the 2 June high will be a sell. So like US Canadian, more of a correction, it seems, and then a selling opportunity. Now the move down, keep in mind we do have the gap here on Euro Canadian, but my view on Euro Canadian is that it will actually be more bearish than just a gap fill. I'm actually looking at this to head back towards this possible trend line here and actually breaking that and moving down beneath it. So that is my current view, and I think that if we can see a corrective price movement into next week, perhaps by the towards the end of next week, or maybe the week after that, we will see a bearish opportunity. I think it's next Friday that there's going to be a Canadian GDP print. So that will probably come out. Friday is Canada Day. Well, I mean, in terms of news, Canadian news, market impacting Canadian news often is announced on Fridays for some reason. I don't know, but that's what I've noticed. So another Canadian pair, Aussie Canadian. Now this is really interesting. This can go a number of ways. I'll start with the bigger view on the weekly, just to explain the whole idea and complex behind this, and then I'll go down to the daily or the 4 hour. The idea on this is that from 2012, the move has been corrective in a number of swings. Now there are, of course, as always, a number of ways to look at this, but I think there's no getting away from the observation that this is a corrective pattern which overall, in essence, has gone sideways. If you're into labeling boxes as such, you have a low range here, a high range here, and it is moving between those two range bound marks. So how I'm looking at it in terms of price patterns regarding Elliott Wave, I'm looking at this as a 3-wave move into here. I'm looking at this as a 3-wave move here as well. Now, my preferred view still, though, the chance of it happening is probably less now than when we were back here in May, is to see that high towards a possible wedge completion and then a really grand and hard move down. That would also come in line with the whole like range bound thing where you have the range up here and it comes to the top of the wedge, meets range bound resistance and is sold into. However, keeping in mind how I'm looking at the other Canadian pairs and a possibility here that I'll go over, I'm going to mark it as likely not to reach that point just now. I'm going to mark it as likely that it won't reach that point. So the observation then is that the 3-wave completion ended here, which was in October last year. So I'm marking that as high for the completion of this pattern, so that would essentially move the B-wave idea to here. So however you count it, whether it's like this or like this, the idea hasn't changed. The idea is that this is corrective and we're looking down. Now to go over it on a more local time frame, more local area. Now switching to the daily, the October high is here. So let's assume, I'm not so fond of it, but I'll have to work with it now unless there's some type of like support into this trend line or so on a new low. I'm going to work with the bearish idea as a running plan, running theory for now. So let's assume this is the impulse here. Following this B wave high into here, let's assume we have a type of leading diagonal for the leading bearish impulse wave. There's a 3-wave correction into here with a new high there. Now from there, it looks like we've had a 3-wave move down and a move up of some kind, and now another swing here. So I mean, if you're going to assume this is 3 waves, we can make the assumption, I think, that we can see a move down to trend here, making this all like a 3-wave pattern, and then a move up for the diagonal. Now that would actually break the idea that this is the impulsive wave here, and we would be seeing a move up. So that is one possibility that I have to keep in mind if the price turns. But I want to talk, actually, I got distracted just there. I want to talk about the bearish sequence here. So assuming that this box segment is the bearish impulse and that this is a 3-wave correction of that. Now, in order to assume that this correction here is finished, I cannot take this segment here as 3 waves and as the start of a new bearish trend. So I'm going to have to assume that the first bearish impulse was here, and that we have a bearish impulse there, and then what followed there was a 3-wave correction, 3-wave correction down, and a sharp move up for a flat, expanded flat. So that would make this segment as a 3-wave correction of this impulse here. So we now have a first impulse established for wave 1 of wave 3. And that this is going to be our 3-wave correction. And that this down move from 8 June is the first impulse as wave 1 of wave 3 of wave 3, I think. I can't formulate that quickly sometimes. But in any case, assuming this is the impulse of the next leg down, then this will take on a corrective pattern in a kind of ABC sequence, then moving down. Now the key on this particular idea is that this high from 2 June holds, so that the corrective swing will remain beneath the 2 June high, beneath the 7 June, beneath the 7 June high, and then we will see a bearish swing from here. So that is the bearish view. Major down move here as a type of leading diagonal. 3-wave correction here into 2nd May. First wave down, first bearish impulse here. 3-wave correction as an expanded flat. Bearish impulse. Now 3-wave correction currently in C, and then the down move. So if this is the bearish sequence, I can run from here because I cannot take this as a 3-wave move as the start of a new bearish trend. If it's going to be a 3-wave move, it will suggest a bigger correction of some kind. So I will keep that in mind, and I'm going to use candles, and I'm going to use lower time frame divergence as an opportunity to look for bearish setups. So as long as this high holds, just to repeat, I am going to look for a correction into here as a selling opportunity. So looking at the 4-hour, I mean, you can see that this here is just going to be a 3-wave correction. And I would look at this on Monday to see if either of these ideas I have work out. I suppose you could count this as 1, 2, 1, 2, 3, 4, 5, 4, 5 as a bearish impulse there, and that are my corrective idea holding beneath the 8 June high, going down after that is what I'm going to run with right now. It fits in line with the other Canadian dollar views. So, remaining bearish on this. Now, New Zealand Canadian. My view on this has not changed. Looking at the weekly, we have the high into 7 November, or the week of 7 November 2016, and from there we saw just this 3-wave impulse. Sorry, three-wave pattern. It's better to do it on the daily. This is how I'm looking at it basically. A 3-wave correction here, 3 waves up, and I am taking this now, zooming in a bit, this segment here on the daily from 9 June, I'm taking this as a 5-wave bearish impulse. So from that, so long as this corrective move holds the 9 June high, I'm viewing it as a correction against the impulse. Now on the 4-hour, so I'm counting this as 5 now. As long as that high holds, I'm running with the bearish count. It is simply a matter of like this. So it looks like we're going to see probably one more high. Just a moment. I suppose at this stage the odds favor another high, so long as it holds beneath the 9 June, 8 June, 9 June high, that's okay. This idea didn't work, but this is corrective. So I'm working the bearish pattern on this. Actually, this type of, if you look at the daily, this type of sequence here where you have that strong down move and then a bit of sideways, it's kind of like what we're getting on Euro Canadian on the daily, where we had this very strong Thursday candle and now a bit of turnaround support and a bit of a bigger correction. So kind of like basically what we're seeing on Euro Canadian right now is what probably has already happened. Or rather, what has already happened on New Zealand Canadian here is what may happen on Euro Canadian, where you had to move up, sharp move down, but it was not enough and it moved up. So something similar like that to happen on Euro Canadian. But for New Zealand Canadian, I'm going to work the bearish idea so long as this high does not hold. Price today on Friday, 23 June, will probably close within the bearish, within the wick of this bearish candle. So if we see a move up on Monday, or maybe not even to a new high, I cannot say that for sure, there will be a chance to sell into this because today's price will most likely close within the wick level there. There's not much else I can say about the weekly. Stocks are at 80. It's possible to turn over here, and the month still has some time to go. So nothing else to say there. I am looking for the stocks at this stage. They can go either way, but the fact they've already started a downtrend does set it up quite well for a turnover here. So that's the view. Again, as long as this high is not broken, I'm running with the bearish view. So all these pairs are bearish. US Canadian is they're all in some type of correction at the moment. It's looking like both Aussie Canadian and New Zealand Canadian are quite close to finishing, so long as their respective high marks that I mentioned hold. And Euro Canadian and US Canadian appear to have a bit more work to do, whichever way US Canadian goes of the three scenarios. It looks like it has some more work to do, and Euro Canadian too. But I'm viewing them all as bearish. So that is how I see the Canadian dollars. That's how I'm counting them. That's how I'm viewing them. And that is the approach I'm going to take next week to look for opportunities to sell into. So long as the local highs hold and the patterns are corrective moving into them. Okay, and a brief look at gold. I have to admit, I cannot really count this short of making a couple, supposed counts. What I want to say about this, as I said in yesterday's video, I'm actually looking for gold to move up here. I like the bullish view on gold here. And I'm going to run with this. Do you know what this pattern reminds me of? Actually, it reminds me of this is the daily. It reminds me of the daily on Euro US dollar that we saw earlier this year, where it was choppy, overlap, or like that, choppy and overlap. And then we took off. It's that kind of pattern. A lot of people were bearish on this, including me at particular points. And this type of sequence here with chop and overlap, though you can count some advances, 5-wave advances in the up moves. It's the kind of thing that could be happening here, where we have overlap, some chop, and regardless of the overlap, it is setting itself up bullishly for a move up. Now again, we are at resistance, not the ideal place to buy, but looking at the weekly, there's a small little hammer there, and these have worked in the past here. So I'm going to take it again as a bullish scenario here. Stocks are just holding up, so if we can get a bullish, did I say bearish just then? I'm not sure, but I'm going to take it as a bullish possibility. I'm going to take this whole sequence as bullish now. I'm not going to, although it looked bearish on the weekly here, what was that, 2 weeks ago, and it did sell off, and we are at larger trend resistance here. I am going to take this as bullish from this position. Now the US dollar is looking weak and crumbly and diffident and all kinds of kind of hollow and not really confident things. So in that scenario too, I would want to be bullish on gold and the metals and certain other things too. So I'm going to hold this as bullish here. And I'm going to look for a move up next week to a break of resistance and to a new high. That's going to be my view, even though I cannot put a confident count on this. Following here, my confidence kind of ran out at this point. This was all marked okay. Got confusing for me when we came down here, and this I found hard, but getting some inspiration from another confusing movement here in Euro US dollar, which looks bullish and looks to have broken the downtrend, the multi-year downtrend. I'm going to essentially keep that in mind and judge this as looking bullish here, even as it looks a touch under resistance. This is a three-wave correction so far. So I would take it as bullish again and again and again, and let's see what happens next week. Okay, I'll do another update tomorrow or Sunday, and I'll cover the US dollar, Euro, some other pairs, Euro New Zealand for sure, Aussie New Zealand, and probably the yen pairs. Yeah, the yen pairs too. Okay, have a good weekend. Bye-bye.